Hello everybody, it's your guy here, the unknown, and today I want us to look at something important. I actually want us to look at how to trade indices in the most simplest way. And believe me when I say in the most simplest way, this is actually going to be the most simplest strategy for trading indices. And of course, I know most people hate indices because they're highly volatile, and they think that because of their volatility they present bigger risk. But believe me, this is gonna be an easy strategy which is low risk. Okay, and one thing I love about this is the fact that your take profit will be hit quick. Okay, so if you are somebody who wants to be in and out of the market quick so that you can focus on the rest of your day or do something, this strategy is gonna come in handy. So please stay till the end because I'm gonna be revealing something very important. So, good people, please write these things down. The word patience, then write time, then write trapped volume, then an engulf, okay? Because it is important to stay patient, okay? And I'm gonna explain all these things, okay? Please write it down quite quick so that we can proceed to the charts. And while you still are writing it down, let me say this, guys. Trading 101. If you're a trader, you know you are a hunter. Okay, you have to hunt for these setups and take them whenever they present. Setups will not present every day, hence we don't trade every day. There are days when the market will make you feel like you don't know what you are doing simply because the setup hasn't presented. Don't feel bothered, just wait for the setup to be presented. Even lions do not catch every day. Okay, they know when to strike, and they actually know when not to strike. Okay, so guys, I believe you are now done. I'm saying this because I've been receiving comments of people saying this strategy doesn't work, this strategy didn't show up this week, this strategy is like garbage or whatsoever. Okay, so I share with you things for free, and I share with you things that work. It's up to you to go and apply them or to backtest them and understand them. Okay, so guys, without any further ado, let's jump into the charts. As I said, patience, patience. You must be patient, sit on your hands until you get the most easiest trade. And I'm gonna show you what I mean by the most easiest trade. Okay, and what time is it? As you can see, this is an I session indicator. I only trade indices during the US session, which opens at 9:30. Okay, 9:30. So this is the candle that opens the equity time. I don't care how many pips it moves before the equity time. I'm only going to trade starting from the equity time. I'm not gonna chase moves. I want to focus on the process. Why? Because the process is very important. Do something that is replicatable, something that is repeatable, something that happens over and over and over again. Sometimes they are not gonna move before the equity opening time, or sometimes the equity opening time is going to throw a stop hunt and close you if you entered early. Hence why I always focus on the process. The process is the most important thing. Okay, the process. Note that down. So this is an I session. If you look at it, this is a 5-minute chart, and here it's 4 hours. It has highlighted 4 hours, and the reason is indices are mostly moved late. Okay, and this is the equity time, so I eliminated the first hour. The reason is I am only willing to execute after the equity opening time, because I know that the equity is most likely gonna throw a stop hunt. Okay, so that's time. Now we're gonna go to trapped volume. One thing you must understand is who is trapped. Okay, if you don't understand who is trapped, please do not execute. Okay, why? Because indices mostly will trap and then shift away from trap volume, and once you start understanding that, they are gonna hit your take profit very easy, and that will actually help you sit on your hands. Okay, and then the last thing is engulf. Those are the words I say you should write down, right? The last word is actually engulf. Okay, this is important. We want to see them shifting the zones from trap volume with an engulf. Okay, so here's the thing. I'm gonna summarize everything under the subheader patience. First of all, you want to wait for the equity time. Secondly, you actually want to see trap volume. And thirdly, you want to see an engulfed shift zone from trap volume. That is actually gonna allow you to sit on your hands. Sit on your hands until all these criteria have been fully met. Okay, so now let's jump into the charts quite quick. I said you're a hunter. Sometimes or some days the setup won't be there. Okay, and this is part 1 of this series. Okay, because this is the easiest one. I just wanted to share it with you. And remember guys, I'm sharing with you everything for free. So please, 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 if you don't like the concept or if you think it's not gonna work for me, don't tell me it doesn't work, because it's something I'm doing every day. Okay, don't tell me it doesn't work without even trying it. Okay, so guys, this one is gonna be mainly on Nasdaq. Okay, I'm gonna be focusing on Nasdaq. So guys, let's look here. This is the high and the low of the previous day. Okay, so if you don't have these indicators, you can just draw lines, the high and the low. Okay, this is I session. The indicator is in my description. Okay, I told you the times are from the equity opening time, and then you add 4 hours from the equity opening time. This is a 5-minute chart. The reason is I love the 1-minute chart, but I've realized that most people don't like the 1 minute time frame because they find it to be noisy. Okay, so I love the 1 minute, but still again the 5-minute is still good because it lowers your risk. Remember, the goal is to actually have small risk. Okay, small risk. So the 5-minute time frame will actually allow you to have small risk as compared to when you are actually focusing on the 15-minute time frame. Why? Because the 15-minute time frame will make your stops bigger. Okay, because obviously you know that will be 3 5-minute candle and 15 1-minute candle. Okay, so you can imagine somebody who entered on a 1-minute time frame is gonna get their trade early. Okay, so look at this. This is the closing price of yesterday. Interesting. Most of the days it's gonna be like this, and I repeat, most of the days it's gonna be like this. Look here, they have trapped volume below. As you can see, they are sending traders down, so people are actually selling, and everybody who is actually selling into the low of the previous day, which is this blue dotted line. The indicator is in my description. It's free. Okay, everybody who is selling into the low is literally not going anywhere, and right before the equity opens, they shoot up. I want you to understand this. This slope, you see the slope, this is an explosive slope. Once you see something like this slope, guys, you must understand that now they are just trapping people down, sending people down, and they are not releasing them. So this is important. Whenever you see such a slope like this, if it's going down or if it's facing downwards, that is an explosive slope to the downside. Okay, but still, I'm not saying execute the slope. Okay, because sometimes the market will actually have another plan. And remember, we trade evidence. If there is no evidence, we are not entering. Because guys, I know people don't want to put in the work. People are gonna look at this, and if they don't see it because they haven't tested this, they haven't back tested it, they are just gonna want to take it whenever there is a slope. You are risking real capital. Remember, that's real money that is at risk. Okay, so you must execute things you understand. I'm saying this is an explosive slope. This one is actually slope to the upside. It's an explosive slope. Most of the time you're gonna see this slope and it's gonna explode in the direction of the slope. If it's a slope that is actually pointing downwards, that means the move is gonna explode to the downside. But I'm not saying execute the slope. You must execute something you understand. Okay, this is highly important. Okay, so guys, look at this. They trap volume to the downside, and then before the equity open, they shift zones from trapped volume. Okay, that's important. And remember what we are doing. We are sitting on our hands. Why? Because the equity hasn't opened yet. Okay, so we are sitting on our hands. We know where trapped traders are, down here. And then again, the equity opens. We are not just gonna take the equity blindly. Okay, we still want to see what's happening. And as you can see, they consolidate. Okay, on a 1 minute time frame, you will see this. You will see this clearly. It's gonna be like a big consolidation, okay, or a big area where they are trapping traders, and it's gonna be very, very visible on a 1 minute time frame. Hence why I love it. But I'm not saying people should trade it, because most people don't understand it, and it's a bit noisy if you don't understand it. So it's about taking something you understand. Here is another slope again towards the upside. You see, they've sent people down. Remember, these pins don't just become pins, they are big candles going down. People think, okay, now they are going down. People are always thinking of counter trending. Okay, you see, here is that slope again, but I'm not saying take the slope. Okay, so as you can see here, this is trapping volume again. They are gathering orders here. Okay, after a big move, this move has already broken to the upside. Okay, it's not always about counter trending. And remember, we are waiting for what? For evidence. If there is no evidence, we do not execute. This is important. I repeat, we execute evidence. So now you know they've trapped volume down, they've broken to the upside, and they are trapping. We are not gonna execute simply because there is a pin. Okay, we don't chase prices. That's the most important thing. What do they do after trapping? They give an engulf that shift zone immediately from this area of trap volume in a move that's already going up. What did I say right? I said right. Patience. Yes, we are patient at this time because our criteria have not been met. But the moment they give this engulfing candle, now this is the easiest trade. Why? Because obviously you can see that they are going up. They've broken up against the trapped volume. Here's another slope again. You see, this engulf is what you execute. Okay, it's what you execute. You can put your stops below the engulf. The main thesis is that this kind of trades are explosive in nature, and they are gonna hit your take profit quickly. Look at this. My target is 50, and believe me, the reason I put 50 on indices is because I have tested different take profits. I've used 100, I've used 150, I've used 200. But most of the time what happens is they will go and hit 50, go to 60, sometimes 70, sometimes 80, then reverse and come and close you, okay, or change direction. So you want to be in and out quick. And the only thing that will actually benefit you is once you have mastered quality. Quality is better over quantity. Why? Because with quality you can increase your lot size, double it, triple it. Why? Because these are explosive moves. You can use any lot size provided you are following proper risk management. Okay, because there is still room for a loss. There's always a room for a loss, so always think about that. Okay, but these are explosive moves, and most of the time they're gonna hit your take profit. But you don't want to give back profits that you've actually accumulated over days in just one trade. So use proper risk management. There is no substitute for risk management. Why? Because nobody is immune to losses. Any trade you open can be a loss. Okay, so use proper risk management. Okay, and if you are sizing in, you must know how to size in. Okay, use one lot size, then build profits, then increase it after time. You can say, okay, I will increase my lot size after 3 months. Once you have seen consistency, and then after 3 months you increase it, then you see consistency, then you increase it. Okay, that will actually help you to have a very like good graph in terms of your profits. Okay, so guys, I repeat, you need patience, and patience is summed after all these things. What time is it? We are waiting for the equity time. Okay, trap volume. Where is trap volume? Okay, that's important. If there is no trap volume, we do not execute. And lastly, we want to see them moving away from trap volume with an engulf. Okay, so once you wait for all these criteria, it's gonna be easy. These criteria will actually help you sit on your hands. Okay, because it's all about sitting on your hands. You try to guess directions before them, you are gonna lose. Why? Because you don't move the market. Wait for those who move the market to make the first move, show you the easiest, then ride on. It's easy that way. Okay, however, I know that because of emotions, people want to get in early. You see a pin now, you want to maximize the amount of pips you get out of the market. Please shift your mindset from quantity, from quantity. Okay, focus on quality, because now somebody's gonna enter here and say, okay, now I want to target 300 pips. It's not about the number of pips. We don't care about the number of pips. We care about the quality. Hence why I focus on 50 pips, because it's easy to hit 50 pips in a couple of minutes and you are out for the day. Now let's go to another one. I actually spent a lot of time explaining on the first part because there was just a lot to explain, but here I'm just gonna be a little bit quicker. Okay, let's look at this. Usually they're gonna spend the entire day trapping volume. Now you can see everybody who bought into the closing price of the previous day is trapped. How do you know that these people are trapped? Obviously the market sends them into that direction and it moves away from those trap volumes. So everybody whose order got fulfilled here is at a loss. Okay, and once the market has trap volume, it's gonna shift away from that volume quite quick. And as you can see, this market is broken down. It's broken down. Remember, patience, time. We are waiting for the equity time. Okay, we only press the go button after the equity time. I'm not saying the execution button. No, you actually press the go button. For me, it's like I actually say I am now ready to take an execution once it has hit the equity opening time, because the equity opening candle is gonna be the largest and it might be a stop hunt. You don't want to be in something that you're gonna actually get stop hunted out of. Okay, so yes, sometimes they're gonna move before, but I focus on the process again. They move the market, they pull back. Remember, they have trap traders up here. They pull back. Others still believe that prices are going up, they buy. So everybody who actually executed inside this this pink box is trapped. Okay, so they shift prices down. The equity opens. You must understand what's happening. So when the equity opens, prices are just going down, down, down. Don't chase prices. Okay, don't chase prices. They will trap even during the session time. Okay, so they're gonna trap early and they're also gonna trap during the session time. This allows us to be patient. As you can see now, what are they doing? They pull back and start squeezing people. You see, they start sending people up and sending people up and sending people up. We don't do anything because we don't know what they are planning and we don't know what they're gonna do. Okay, but immediately when they engulf here and give this candle that closes underneath, now we know that everybody who was part of this squeezing is now trapped and the market is broken down. Chances are they are not gonna go back to them. So you can execute on this one. And then why? The reason I'm saying on this one is because now this is evidence that now they are breaking down and they have actually moved from all this squeeze. Okay, and your stops can be just tight above here. And you see, it takes a few minutes to hit 50 pips. This is actually 50 pips. Wherever you see me, wherever I've written pips, this is 50 pips. You see, it's so easy and so quick. If you are targeting 100 pips, sometimes you're not gonna get that because they are just gonna go maybe 60, 70 and then start reversing. Actually, in my previous video, I've explained that I used to target bigger or large amounts of pips, and that's what caused me the most pain, because they will come and close me. And you know how I feel about trailing stops. I don't like trailing stops because sometimes they will come and just retest that level because they know where people are gonna trail stops to. Okay, so trailing stops and actually targeting large amount of pips costed me the most. Okay, and actually costed me the most pain. And let me tell you something again. You think if they're coming for you, you risk whatever, you lost whatever you risked here. No, you didn't lose whatever you risked here. They went 50 pips. Now all that equity was yours. Okay, it was yours. Say maybe here at this point you made $1,000. That means they $1,000 from a $100 risk. Now that means you have risked you have lost $1,000 plus that $100 that you actually risked here. So always lock your profits. Okay, the market is broken down. What do you want to see? We want to see trapped volume. Now they are squeezing. This gives us a thesis of what they're doing, but we are not sure because they can reverse. However, when they break down and closes here, now we know what they are actually doing. Okay, so it's all about remaining patient and waiting for them to give the first hand. Believe me, that way it's way too easy. And this is then in golf. Okay, and this candle actually closes below. Now it's a very easy execution. Why? Because they have given us evidence. Okay, we need evidence. That's why I always emphasize patience. You don't know what they're gonna do until they give you evidence. And most people have seen this evidence, but they didn't wait enough to actually stay, okay, and wait for that evidence. Hence why most of the trades are you lose. You'll feel like, I was a fool, I shouldn't have done this. That's because people are not waiting for evidence. Now we see, okay, they take people down. Everybody below this this level, this, it could be a low or a high, I didn't actually mark it. Everybody below this level is trapped. Now the markets are moving up, the equity opens, they pull back, they go up again. Okay, they go up again, and then this is where they start squeezing people. They give that beautiful slope, they break out of the squeeze with an engulfing candle. This is evidence that they are breaking down, and we are targeting 50 pips. Okay, but this one on this day didn't go to give to a point whereby it gives 50 pips. Okay, so I just want you to understand that some days they won't hit your take profit. That's something that happens. Okay, but 50 pips, it's gonna happen most of the time. And I included this to show you that sometimes if you have bigger targets, then you might not get what you want. Okay, for me the most important thing is the squeezing, it's the trapping. Once I know who is trapped, I know they are actually gonna punish these guys. Okay, but they gave 43 pips. Okay, which obviously if I was targeting 50 pips, they would have came back and closed me, and this is not a problem. This is not a problem. Why? Because the process, every loss incurred after following your plan is a psychological win. So there is literally no loss, because you might lose capital, but this is a psychological win, and this is an indication that sometimes they won't get to your take profit. This happens. Okay, and what I do usually is I take that trade and I just want to be out of the charts for 1 hour, and then when I come after 1 hour, most of the time I find that my take profit hit. These are explosive trades, but some days the market will have another plan and nobody is immune to losses. Okay, so I just included this to show you. Okay, even though we can see here that it was on the front side, but I love this where they squeeze people or trap people, break out with an engulf. This is evidence, and these moves are just explosive in nature. Okay, so let's go to another example. Most of the time, as I said, I'm gonna repeat this, as I said, most of the time they are gonna trap below the level, and they usually use the closing price of the previous day, but sometimes they use the high or the low of the previous day. Okay, they can trap below or above these levels. The most important thing for you is to know when the equity is opening, who is trapped. Okay, as you can see, they send people down. For us, if they didn't do this, if we were not patient and waiting for the right time, we could have thought that, oh, okay, they have trapped above this level. But patience reveals everything. Remember, time is important. Time heals. Time is important. Now the move has broken to the upside. Okay, who is now trapped? Everybody who followed this news candle is literally trapped. Okay, so we are not chasing candles, we are coming at the equity open. Yes, there is a strategy for trading news, but today I'm focusing on this easy trading strategy for indices. And remember, I'm not doing any day count here, I'm looking on the day itself. Okay, so this is where trap volume is. How do I know? Obviously they sent people down quite quickly and then they reversed, but at this moment I have done nothing, or I'm doing nothing. Okay, I'm just sitting on my hands. I'm just sitting on my hands. What happens? You see, they consolidate. They consolidate. You see, this consolidation after the equity open is trapping volume. Okay, they give a pin engulf, but this is not evidence. This is not evidence. This doesn't show you what they are doing. They could keep on trapping. Okay, that's why I actually said pins mean nothing. Pins actually are a tool you use to trap traders. Okay, so I don't focus much on pins. Okay, I focus much on evidence. So you waited for the equity time, they trap. The market is broken down. We can see that they moved away from these guys, but still they can still come down. We are not sure. Okay, we are not sure. The only thing that's gonna give us assurance is what is the engulfing candle that shift the zone from trap volume, which to us is the evidence we are looking for. You see, now what do? They break out with evidence. They give that evidence. So this actually helps you sit on your hands. I believe you are seeing the importance of sitting on your hands. This is so easy. Once they give that evidence, you execute. You can put your stops right below the evidence candle, okay? Because this is actually an explosive kind of trades. And look carefully. You see, here is that beautiful slope. Okay, here is that beautiful slope. They give a W, they break into it, they retest that level, they engulf here. But we are focusing on the process. We are not executing before the equity opens. Okay, so that's the most important thing. Now they break out with an engulfing candle. This is evidence. If you are sitting on your hands, you now know that this is evidence. You can't be scared of executing evidence. This is evidence. You execute it, put your stops down here, and then your 50 pips hit, boom, fast. Even though they moved quick, more pips up, we don't care about that. Okay, we focus on the process. But this one here, remember there was a video where we actually did different kind of trends, and I mentioned creeping trends, and then again there was normal trends, and there were explosive trends. Explosive trends are seen or identified using 2 or 3 trend lines, right? You still remember? Okay, so this is where you can put your first trend line for the slope, okay, and then another here for the slope. So these are 2 trend lines on different levels. This is a sign that this is an explosive kind of trade. If you look at Nasdaq yesterday after non-farm, okay, non-farm sent people down, but if you go and look at it, you will see the explosive type of trend. Okay, yesterday on Nasdaq, it also happened on US 30, okay, and it also happened on S&P 500. Okay, if you look at those 3 indices yesterday, you will see the explosive trend where it's identifiable by using different types of trend line. The first trend line here, and then they move to another level where they give another trend line, another beautiful slope. That's a sign of an explosive move. Okay, so if you understood that, if you understand that, you could have expected more here, but again, the process is important. 50 pips with a bigger lot size, you are in and out, you don't care, okay, because this is stress. The more time you spend in a trade, the more stress you're gonna have. Okay, you're not gonna be at ease. Again, it's based on the kind of lot size you used. Okay, so okay, we are proceeding. You see, trap volume. Now they are trapping, gathering orders. We are sitting on our hands. We are doing nothing. The moment they give this engulfing candle, that's evidence for us. Why? Because we need the easiest kind of trades. If it's not the easiest one, we don't care. We are not in. Okay, but again, follow proper risk management. Why? Because nobody is immune to losses. Okay, now let's go to another one. Okay, this is part 1, guys, and let me just show you. Okay, you see, this is a common practice where they will actually trap volume below the closing price. Again, I repeat, sometimes it could be above or below the high and low. It could also be above the closing price. Okay, so once they trap below the closing price like this, what do? Nothing. You're sitting on your hands. Why? Because you're waiting for the equity time, right? The equity opens. What do? They still continue sending people into trap volume. right? They continue doing that. Now let's wait. What do? They break to the upside. Oh, this is beautiful. They break to the upside. What do? Nothing. You sit on your hands. Why? Because they haven't given you that easy trade. And up to this moment, you don't understand what they're doing. Okay, you don't understand what they're doing. Okay, so you wait, and now the market is broken up. They actually pull back. What do? They send people down, and now they're giving that beautiful slope, explosive slope. Okay, that beautiful slope. Okay, for somebody who understand, they could have taken their trade maybe after this candle, but again, we are waiting for evidence because they can still keep going down. We want to be sure that now they are going into a certain direction, so that we just get on them. Okay, because you remember, if you don't move the market, the only thing you can do is actually ride on them. Okay, and you ride on them after they've trapped volume, which is why I said, if you can't identify trap volume, do nothing, do not execute. Okay, so you see, this is our evidence at this point. Now slope engulf, at this point we are certain that now we know what they are doing. This is evidence. We trade evidence, guys. I've been talking about these things in my previous video, but I've known that actually most people might not understand this. Now I decided to show you in the easiest ways. And I know again that people are gonna complain, this doesn't work. Guys, if you think something is not for you, it doesn't work, just pass it. Okay, because I'm spending my time and I'm investing a lot of time just to assist for free. This is free. Okay, so I'm spending my time to share with you what I actually use. So please, if you think this doesn't work, just skip it. Okay, you can also unsubscribe if you think like it's garbage trade. Okay, but please don't stand in the way. Those who understand it, or those who actually believe in it, will go and backtest it, put it into practice, master it, and use it. Okay, if it's not for you, you can unsubscribe, it's fine. You can actually also just skip it, okay, rather than giving me nasty comments, because this is free content. Okay, I'm not even charging a cent for this. It's free content. Okay, and it's something that took me a lot of time to understand, and trial and failure. Okay, so guys, this is evidence. We trade what? Evidence. Here's your 50 pips, hit quick. Okay, they keep on going up, we don't care. Okay, get paid. Okay, 50 pips is gonna be very easy. You see, it's only 1 2 3 candles, 50 pips hit, 15 minutes. I told you, I take it, I get out of the market for an hour. When I come after an hour, most of the time my take profit will be hit. Yes, there are days when the stop loss will be hit. Hence I say, use proper risk management, because nobody is immune to losses. If you don't move the market, obviously you don't have all the powers. One thing you can control is your entry, your exit, and your target. But with proper understanding, you just ride with them. Okay, that's why trap volume is important. Don't be part of this trap volume. Remember, these markets are moved by fear and greed. Okay, there are people who are scared of missing out. They are the ones who are actually gonna chase these moves and end up being part of this trap volume. So ours is to wait for them to get trapped. We don't care. Wait for them to get trapped and wait for the evidence. This is so easy. Okay, when you learn to sit on your hands. Okay, again, here is another one. We have trap volume below the level. They explode up. When the equity open, already we are in a move that is exploding. Okay, we are in a move that is exploding. Okay, now they give a slope, they continue. Oh yes, somebody could have taken this, more especially if you're on a 1 minute time frame. You could have seen this easy, and you take it and you get paid. Okay, you get paid. Okay, but look at this. This is where they trap again. So guys, to simplify this, we need to understand who is trapped. Okay, they're gonna trap at a level, and again, we need to understand who is trapped during the session itself. If we don't see trap volume during the session itself, we do nothing. Okay, however, on this day there were news. Okay, so when there are news, I will say go to a 1 minute time frame, and you will get the best entry, where they will go down on a 1 minute time frame, and then they will pull back, give you that beautiful engulf. Same process. It's about the process. We want to see that easy engulfing candle that is giving us the evidence. So on a 1 minute time frame, they did give evidence here. That's why I wrote 1 minute chart. Okay, That's the one that presented the opportunity, and you got your 50 pips quite quick here as well. Okay, so it's the same process day in day out. You want to identify who's trapped, okay, because chances are once they have a lot of people trapped down here like this, they are gonna go, and if they give an opportunity, because some days they want, if they give an opportunity, chances are they are just punishing those who entered early. That's why I always say 50 pips. They can punish these guys and still keep going up later, okay, because the most important thing is to understand who is trapped. Okay, so guys, as you can see, they're trapped below the level. Here again, they trapped below the level. The equity opens, it goes up, it comes down again. This is an explosive day. You don't want to be in these candles because this is a very, very big candle. Okay, and if you're gonna take a trade whereby your stop is gonna be 60 pips or 70 pips, then obviously your risk is very big, and that's something we are actually trying to avoid. Okay, now the market moves down, but again, if you are selling this candle, as I've just said, no one is immune to losses. Hence, you must use proper risk management, and you must only be willing to risk what you actually comfortable with, okay, based on your account size. So this one was very, very explosive. I wouldn't suggest anyone takes a trade after such a big candle. Okay, so you just wait. They keep going down into where? Into trap volume. Oh, this is beautiful. Then what do? You see, they trap down here, but the trap is not a clean trap. It's not a clear trap. We can't say this is a trap. Okay, now they pull back, they go up, they give you those pins. Why are they giving you pins here? Because they want people who are emotional to think this move is continue going down, hence they send you down. Okay, so for me, I did mention this in my previous one, that if they start doing something like this, I just wait, because obviously they are just not going anywhere and they are giving big candles. I just want to wait, okay, because this for me is choppy. They are just chopping, even though they are moving down. This is something I don't like. Okay, so when they pull back, you're just doing what? You're sitting on your hands. Most people blew their accounts here. Pin, they execute. Oh, it comes back. Pin, they execute. Pin, they execute. You know, there are people who will actually add on to a loss. They see this many pins and they're just opening. Now we're gonna kill it. And what do? They don't even tease you by going down. They actually give you that beautiful slope. They go up. Okay, fine. We are patient. Why? Because we are actually waiting for trap volume. Up to this moment, we only see the trap volume from the day itself, but during the session we don't know who is trapped. Okay, so we do nothing. Okay, and that's when they start consolidating later. We know that they move indices late. Okay, so if you are still available on the charts at this time, what do? They send people down, they engulf. Okay, so for those who are actually comfortable, some could have taken an entry here and some could have taken an entry here. Okay, but it's all about understanding who is trapped. Okay, so this is actually where they also trap, and already we know that they've sent people down, and everybody down here is trapped during the session itself, because this is where they moved away from them. Okay, so this is evidence, but I know for most people, maybe they were not comfortable taking this. You can still wait. Okay, sometimes they will go after this because these are explosive trades. It's fine. Remember, if a trade goes without you, it's not a loss. You actually reserved your capital, because if it was something you did not understand, then not taking it is or was the best decision. Okay, because you don't want to be exposing your capital to something you don't understand. Okay, so again, they go down, engulf. Beautiful pin engulf. This is an entry. If you don't trust this, here's another evidence. Now at this point, they have just shifted away, and you can put your stops right below this candle. Why? Because this is evidence. Now they're showing you that they are going up, and your take profit got hit very quick at a level again. Okay, so it's all about the process, understanding who is trapped when. Okay, so for me, it's all about sitting on your hands. That's the most important thing. Sit on your hands until they give the most easiest trade. At this point, we can see that during the session itself, they sent people down, and then they broke to the upside. This market is broken up. Okay, we just want to see them pulling back and giving that beautiful engulfing candle, which is why I say this was actually a very beautiful entry. Okay, and then for those who didn't understand, fortunately they gave another opportunity here, and even for those who maybe entered here, it's another opportunity, and then your 50 pips got hit quick. So another thing I'm trying to show here is that do not try to catch the high or the low, because you never know when the high is locked. Somebody could have executed this one. I don't execute this. Why? Because they can still keep going down. I don't even know if this is the high. I don't even know if this is the low. Mine is to wait up until they give the easiest one, and the easiest one is actually presented when I can see that they've broken out, or they actually trapped people, and now they've given me evidence that they're moving in the direction. Okay, so 50 pips hit very, very quick, guys. You are in and out. Okay, here's another example where they actually trap above the closing price. Okay, so they can trap anywhere, and I'm not using day count. Okay, on this strategy, I don't even use day counts. Okay, it's very easy on the day itself, because you don't know what they're gonna do. So once they have trap, how do you know that they've trapped? Obviously they're hitting this level, then they go away. At this time we don't even care what's happening, because time, we are waiting for US equity time, 9:30 US time, 4:30 South African time. Okay, and then they send people where? They send people into the closing price above, obviously, and then they break down. The moment we see this, now we know these guys are trapped, but we don't know up until we get the evidence. Okay, so what did they do? You see, they send people up again. Oh, now you can see on a 1 minute time frame, guys, this is gonna be so clean and so clear. Okay, because it's gonna be a lot more like consolidation. Sometimes it can be like triple tops, you see, and that's gonna simplify things for you, and your entry is gonna be early. But don't take something you don't understand. Okay, so this is trapping. They've trapped volume up, they broke down, now they pulled back, and yes, they keep on sending people up. This is part of trapping again. Okay, it's part of trapping. As you can see, even this triangle, it's actually where they trap people above. Everybody believes they're going up, and when they see these things, they think people are going up, they give you an gulf. This is not evidence on itself. Okay, we want to see them breaking down. Okay, they give an inside bar and they break down, but at this time here, guys, this is evidence. You can see they are now going down, and what do? They explode in one candle. They hit your target. Okay, yes, they keep going down, but for me, the process is important. 50 pips is something you're gonna get every day. Okay, and don't feel guilty if you took your profits and they kept going in your direction. Once one wise man once said, it's easy to lock your profits when the move is still strong, because if you want to lock it at the low or at the high when it's weak, then they are gonna correct roughly 40%, and you're actually gonna close your position at when they have pulled back. Okay, so it's better to close it while the move is still moving strong. Okay, 50 pips, you are in and out. Once you get used to these things, you'll see the importance of it. Okay, you'll see more greens on your charts, more take profit being hit, rather than when you are actually targeting 100 pips, which you are not gonna get every day. Sometimes of course you're gonna get it, but most of the time you might not get it. They'll go 70, they'll go 80. Guys, I did that. I understand what I'm saying right now, and I'm actually sharing my experience with you. Okay, that cost me the longest of pain. As I always say, this is not an industry where it's get rich quick kind of thing. No, it's an industry that takes time. You grow into it, you learn. Every time you get experience, you learn. So I'm sharing with you something that I did and something that I am now very aware of. Okay, 50 pips is easy. Okay, unfortunately the video is getting longer, that's why I said I'll only do part 1 today. Okay, but you can pause it if you think you understand. It's okay. This is an example whereby, okay, this day was just confusing because they trap people up, they punish them, then they trapped at the low. Okay, but here's something: we need to see trap volume and to also see trap volume during the session time. So during the session time, who is trapped? That's the most important thing to understand. We want to see trap volume during the session time itself. Okay, and before. Okay, why? Because once they've trapped people before, they might not go to release them. Okay, so that gives us a thesis, and again we are sitting on our hands. What happens? The equity opens, it pins down, comes back with very explosive candle. I wouldn't actually say this is a very good entry, no, because the risk now is too big. And remember, I told you this strategy is low risk. Okay, so the most important thing is actually understanding that you need a low risk trade. Okay, So yes, they go up, they go up, they go up. Okay, this is a trend. You can see they pull back and continue. Okay, for somebody they could have taken it here, but for me, I want to see trap volume during the session itself as well. So you see 1 2 3, this is a beautiful triple top. They try to go up but fail. So this literally tells you that everybody who bought here is trapped. Okay, but again, we're not gonna execute here. Why? Because we are waiting for evidence. Okay, this was evidence, but again, you can see they could have still came and bounced here, but the moment they broke down, they pulled back up and gave a pin engulf. This is evidence now. Okay, this is evidence now. And okay, this is a 20 EMA, but for me, honestly, I don't really need this 20 EMA. Okay, because for me it's about who is trapped, and then have they broken out, have they pulled back and then given an engulf. That's the most important thing for me, and I've explained this in my previous videos. Okay, it's just that right now I'm on a 5-minute time frame, and I prefer the 1-minute time frame, but it's the 5-minute time frame is still good. Okay, you see, what do they do? They give a pin engulf. This is beautiful evidence. They're broken down, they will try to go up, they failed. They give you a pin engulf to show that, okay, everybody who executed or followed this candle. Remember, this candle was not just a candle. Okay, there are people who believe in support and resistance, and they see this as support and resistance, and the moment it breaks in here, they see this green candle followed by another engulfing green candle, which eventually becomes a pin engulf towards the closing of the candle. This is very important, guys. Once you see this, you know their job is done above here, so you just enter with no problem. You can put your stop above the pin engulf. Okay, that's why I say this is a low risk kind of thing, and it's explosive in nature. Then they literally explode, boom, and then your 50 pips got hit, and then they reverse. That's why I always say targeting 50 pips is very important, because if you need more, you must understand. Okay, because again, you can see they're broken up, but this is like a counter trend trade, but it is a good trade. Why? Because we can see trap volume. If you cannot identify trap volume, do nothing until you see trap volume and you get that evidence. Okay, so learn to sit on your hands. Don't try to catch this. No, sit on your hands up until they've trapped, and wait for them to trap. Once they are done trapping, they will show you. Okay, they will show you. Don't try to, oh, it's a pin, I'm getting in. You don't know if this is the high. Okay, sometimes you might get away with it, but you still don't know if this is the high. They can still keep going up high. So we want evidence, we want high probability kind of trades, which are actually accompanied by evidence. Okay, so you see, boom, very easy. They have trapped everybody going up. This is roughly a triple top. Okay, on a 5-minute time frame. On a 1-minute time frame, it was gonna be a lot of noise, and it was still gonna be very clear that now they have trapped. Okay, let's go to another one. Guys, I believe now you are seeing these things. Okay, look at this. They trap above the above the closing price, right below the high. Okay, so literally they are not allowing anyone who is in this highlighted space to be profitable. We are not trapped. Why? Because we are patient and we are waiting for the right time. So we are not part of the people trapped here. Hence why I said I prefer waiting for the equity time. Okay, for those who want to chase their first hour, it's okay if you understand, but for me, I'm not part of this. Okay, and that's one thing I really love about these strategies. Okay, I'm not part of this. Okay, sorry if you are part of this. No, I'm not. Why? Because I'm waiting for the equity time. The equity opens. What do they do before they give you pins? Oh, I don't care about these pins. Okay, because I want the market to paint a picture for me. Okay, for some people who trade before, they saw these pins, and remember, okay, people are being sent up when they see pins. Okay, 15 minutes of pinning and then an engulfing candle, they want to enter. For me, I don't want to enter. I wait for the equity opening time, and I wait for trapping during the session. Once I see trapping during the session, that's when I feel free. Okay, so the market keeps going down. After some people took beautiful losses here, it keeps going down and then it goes up again. At this moment, I cannot say I can see who is trapped, or I have that easy trade. They haven't given it yet. They haven't given what? Evidence yet. So what do? I keep waiting. I keep sitting on my hands. Okay, trap. They break down, they go sideways, and then you see what they do. Okay, they collapse down. This is a beautiful engulf, but obviously it's too big, I can't take it. Okay, now what do? They come back, they give an engulf. Obviously I'm not willing to take this engulf. Why? Because this is a low risk kind of setup. I am not taking this. Okay, I'm not taking a candle that is above 40 pips. Okay, I just prefer taking maybe 20, 25. Okay, if it goes to 30, no, I am not gonna take it. Okay, so this is too big, I'm not taking it. Now they give engulfing candle going to the upside. Okay, they close as a pin, and this still means nothing. I don't care about the pin. The pin doesn't tell me anything. Okay, because they use the pins to trap people. And then they give what? A big engulfing candle that closes right below these guys. Now this tells you they are done with their job up here. Guys, they are done. Once you start backtesting this and mastering it, you're going to see the simplicity, and you're going to start understanding when they are done with their job. They are literally done with their job. They give that pin. This is now evidence that now the prices have fallen down. Where are trapped guys? They've trapped people up here. They squeeze people here, trap them, broke down, and still again kept sending people up into trap volume. I don't want to be sent into trap volume. Okay, I want to be sent into trap volume. And once we know who is trapped, they are gonna get punished. That's the main hypothesis, or that's the main thesis. Okay, so once they break here with an engulf, we can see now they are done with their job. This is the beautiful slope. You will see it on a 1 minute time frame, and boom, your 50 pips got hit on the first move down. Sorry guys for that. Your take profit got hit on the first move down. Okay, and then they continued going down. I don't care if they keep going down. Okay, yes, sometimes I will open multiple trades whereby I divide my lot size for the day into maybe 3, and then I actually allow it to one will lock profit or 2 will lock profit, and I'll just allow 1 to actually go. Okay, and this is something I learned. It's very important. Okay, this is something I learned. It's actually called not putting your eggs in one basket. Okay, because you don't want to start with that big lot size. Okay, but these are explosive moves. You can take your lot size, and the thesis is these kind of trades are gonna explode. You put your stops right here, roughly 20 something pips, and they explode. Your 50 pips is hit. You call it a day. It's about the process. It's not about saying, oh, I left a lot on the table. No, you didn't leave a lot on the table. You left nothing. It's about the process. Okay, this thing is mainly about mindset. Okay, once you program your mindset to think in a certain way, you'll see you actually get used to this and more comfortable with this. Okay, I love 50 pips. This is quality. I can use a big lot size, hit in few minutes, I'm out. I don't care what happens afterwards. Okay, so as you can see, who is trapped, what time is it, who is trapped, and then during the session itself we want to see trap, but we are waiting for evidence, and here the evidence only comes late. Okay, because you don't want to chase this is enough evidence, but you don't want to be exposing yourself to such big risk. Okay, because nobody is immune to losses. Okay, if they go against you and you have a 60 pip stop, that's gonna hurt you. Okay, even though we know that the thesis is these trades are explosive, we need the easiest one. Okay, even this one, this was a good kind of evidence, even though we could have ended up losing this one. But the reason I don't take this ones is because of the risk involved. Okay, but this later then presented a very big a very clean opportunity. And sometimes of course you will take trades and then they come and close you and then give you that evidence. I will retake it again, okay, once they give the second evidence. And I've shared with you a couple of trades in my previous video where I've done that. They closed me the second time, I re-entered. Okay, I re-entered once the evidence was there, because I know sometimes they'll just go and pin. And if they just go and pin, that's what they had planned for the day. You just have to understand. Okay, and if the trade is still valid, I will take it. Okay, I will take it. Okay, but I will not take it for the third time. If they pin again, I'm calling it a day. Okay, but I know that sometimes they'll just pin and I will take it again. Okay, but here I'm not willing to risk this amount. Okay, because even on a 1 minute time frame it was very explosive. Okay, but anyway, I believe you understand. Okay, now we have, obviously you see everybody going up. They move the zone from these guys. In other words, the market is broken down before we reach the equity time, and when we reach the equity time, it goes up, it goes down. At this moment, we don't have trap volume, okay? We don't know what's happening. Up until now, they start giving this beautiful slope, and what do? They squeeze people at the top. And let me tell you something, sometimes they're just gonna use this slope as a pullback, which is a stop hunt back into those who are in profit, and then they engulf from it. That's a beautiful trap. You just have to understand the different types of traps, okay? I will try to explain them, okay? You just have to understand the different kinds of traps. But you see here, this is a 5-minute chart, 5, 10, 15, 20, 25, 30, 35, 40, 45 minutes of just trapping with pins. So everybody who actually took this slope up is literally trapped, and now all they can see is many pins, and they are hoping that, oh God, please let them come to break even on stuff. Imagine if you took it here and your order got filled here. Obviously you never saw green on your charts, okay? And then here they broke down, not enough evidence, okay? And this is the candle that broke out of the slope, okay? This was a very beautiful 50 pips up here, and then again they pull back, okay? Already we know these guys are trapped. For those who wanted a second trade, here's another 50 pips, okay? But this is the evidence we seek. They hit 50 pips, they pull back. You see, that's why I love 50 pips. They're gonna hit your 50 pips very quick. But what I do for me is, as I explained, I will take it, get off the screen for an hour and come back, okay? So for those who stay on the screen, this is a pullback, this is an engulf again in your direction. This was a beautiful re-entry or a beautiful second trade, because already we know the market is broken down and everybody going up is trapped, so they are just punishing them, okay? So this was a very good trade for 2 entries, okay? For me, honestly, I love 50 pips, okay? This is why the first 50 pip was hit here, okay? I love 50 pips, okay? And this is a squeeze, obviously this is trapping. So you see, once you are patient, and patience I simply mean following the time, okay? Being consistent with your time, okay? For me, it's the equity time, and again, understanding who is trapped during the session itself, because they will trap before and they will trap during the session itself, okay? So I want to see them trapping during the session, and I want to see evidence. Evidence is that engulfing candle that actually shifts zone from trap volume. So you see, when using this strategy, you don't even need the day count, you don't even need to know what's going to happen on the day, okay? This is like a short scalp. Some people say 50 pips is nothing. 50 pips is a lot, most especially when it's accompanied by quality. Quality allows anyone to take a bigger lot, because this is a high quality trade. You're gonna do more than somebody who is relying on, let me use a small quality and get the most amount of pips. That's what they want you to think. That's how they want you to think. They want you to think in terms of what? In terms of quality, okay? In terms of quantity, okay? Once you start making quantity your priority, now you are focusing on getting the maximum pips out of the market. Remember, that is greed. That is greed. Okay, that is greed. They want you to be scared when they present an opportunity. They want you to be greedy when you are in a trade, so that they can come and close you. Okay, so that's something worth understanding. And unfortunately, I wanted this video to be short, but let me just keep on showing you. Okay, this is another trade. You see, they keep going up and up and up. At this point, we don't know who is trapped, okay? We don't know who is trapped. And then the equity opens, they go up, they give an M. So this is a trade I don't usually take, okay? Why? Because they simply didn't give that beautiful pullback that is accompanied by an engulfing candle, which is now evidence, and that's what I want to see. These are the types of trade that immediately explode. But if you look at all the examples I've showed you, this is a possibility I've explained in my previous video. For me, I want something that is replicatable. I want something that is repeatable. I want something that's like that I can do rinse and repeat. Take it and take the same thing every day, use the same criteria every day. So I know there are days when they will just explode, but look at how many examples we looked at. This is the first example whereby they just explode. Okay, this is the first example where they just explode. And please also look at these dates. You can just go back to your charts and reanalyze again. There are dates here, okay, because I actually group these things in terms of date, and this will actually show you that you are a hunter. You don't trade every day. There are days when they won't show you opportunities, okay? There are days when the opportunities won't be there, so you do nothing. Okay, you do nothing. I would have taken this if they here maybe pull back and dumped and gave a beautiful engulfing candle, because that's what I want to see. I want to see them trying to go up and failing, and then giving me proof, which is actually what I call evidence that, oh, we tried, we failed, now we are falling. And I want to take that evidence. For this one, nah, I will, like, this one just exploded, and mind you, I'm waiting for the evidence. Yes, on a 1 minute time frame, you did see the evidence right here, because they pull back and closed with an engulf. And so I love the 1 minute. But obviously, if something happens like this, I'm not taking it. It also happened on 1 minute, whereby they'll just explode down, and I don't take those ones. Why? Because, as I always say, it's about repeatability. These kind of trades do happen. Maybe out of 10 you might find one. So why should I mess my plan with something that happens once out of 10 times? Okay, why don't I focus on the ones that happen 9 times? Okay, which, like, the process is the same. I wait for the same criteria, the same entries every day. Once you master this, remember, it's gonna be very easy. And the main reason why it's gonna be easy is because it's actually the same kind of thing day in, day out. One thing that might actually affect you is something that affected me. Once you get used to this, you now know that, oh, this works. These are explosive trades. You then start trying to target 100 pips, 200 pips, and they hit your 50 pips, and then they come and close you. Greed. Don't allow greed. Okay, and don't allow, or like, over leveraging or risking more than you actually risk. Okay, keep your risk. Follow proper risk management. Okay, follow proper risk management, because nobody's immune to losses. And one thing I've learned from Jesse was a very great trader. Okay, he lived many years ago, and he paved the way. He was a great guy who made $100 million 3 times and lost it. Okay, so that was a very clear example that nobody is immune to losses. And if you don't use proper risk management, you might make a lot of profits along the way, and you might just give them all in a matter of one trade. So you don't need that. Okay, so use proper risk management. So this one is something I don't take. I just use this one so that you can see things that happen. Okay, see things that happen. Yes, this was a beautiful triple top, but the problem is, I usually wait for that, that pump and dump where they fail, which is part of trapping again, and I wait for them to give evidence. But on this one, they didn't give evidence. Okay, so I usually don't take this kind of things. Okay, yes, it's a very beautiful trade, and somebody will say you missed. No, I didn't miss, because my criteria were not fully met. Okay, and here's another one. Oh guys, I'm about to wrap this because it's now long enough, but I believe you can see this. We don't use day counts. Okay, we are relying on patience, time, trapped, and evidence. Okay, so you see they have trapped above the closing price of the previous day. Indicator is in my description. It's a free download. Okay, so they have trapped. The equity opens. What do? They move prices down, they come back, and they send people where? Into trap volume. The moment they send people into trap volume, and they close with this hammer candle, and they follow the hammer candle with an engulf. Look, 1 2 3 4 5, all 5 candles are actually engulfed by one candle. Where is trap volume? It's above. Okay, so this is part of trapping during the session itself, where they send people into trapped volume. Once you see this is evidence. This market is trending down. They keep giving stop hands to those who saw the move, and they send people where? Into trapped volume. Okay, into trapped volume. Okay, this is an engulf. Evidence. Boom, 50 pips. Okay, for those who didn't believe in this slope, again, I told you, this is, you see, they trap. And guys, don't confuse this kind of things. Okay, there is an explosive slope, and I know that people will think this is this is actually a explosive slope. Look at this. Here they are just trapping in a move that is already broken down. We are waiting for what? For evidence. And then which candle gives the evidence? They give the hammer, they give an engulf, and boom, 50 pips are hit, is actually hit very quick. Okay, so don't confuse this slope. Okay, don't confuse the slope. Now the market is actually going down, and they're trapping up high. You see, this is the slope. Here's the slope. This is an explosive slope, but this is just a pullback. Okay, this is just a pullback. Okay, this is just a pullback. Okay, so you use the slope in line with the trend. Okay, the slope will be in line with the trend. Okay, it helps you not to counter trend, but this here is just a pullback. As you can see, they're just pulling back. Before you know it, boom. Okay, they have broken down at a level. This is another re-entry, clean 50 pips. Okay, so this is the process. I wouldn't just target 100 pips. No, I will take my 50 pips. If they give another opportunity, obviously I'm gonna come after an hour. If they give it when I come, I'm gonna retake it again. Okay, I'm gonna retake it again. And you see, now they give you that W, and they give you that beautiful engulf again on their way back. So this one presented roughly 3 trades, but I will say take one, get off the screen. Okay, take one, get off the screen. On a 1 minute time frame, you would have seen this as a triple bottom or even more, where they just squeeze people. That's why I love the 1 minute time frame as well. But even here, you can see they gave a W, and then they broke to the upside. They came back and then gave that beautiful engulf. You see, they started with a pin. Why? Because the pin sends people down. Okay, because the move is down, the pin sends people down. That's why I said I don't care about the pin. Okay, and then they give this beautiful engulf. The moment they give this beautiful engulf, you know now that everybody going down is trapped. Okay, everybody going down is trapped, and you take your 50 pips. Chances are they won't go back to trap volume. Okay, but of course on this day they did go back to trap volume. So all in all, it's understanding who is trapped. Once they trap, they are gonna punish those guys who are actually trapped. Okay, so that's one thing you have to understand. Okay, everybody who got their orders filled here is literally trapped, and when they give this engulfing candle, now you understand that everybody who went down here is literally trapped, and that's where you build your thesis from. These kind of trades are explosive. You see, trap, boom, down. These trades are explosive. Your 50 pips is gonna get hit very quickly. Okay, so this is why I say the most important thing is the process. The process. You see that slope going down, boom, they explode to the downside. Now they trap people, boom, they explode to the upside. Okay, so that's basically the process. Okay, that's basically the process. Okay, same trade again. You see, they used the entire day to trap below the closing price of yesterday. Okay, the equity open, they break up. Okay, not only that, now they start trapping. You see, they start trapping. This is trapping. Now they can still come down and send people down. Okay, we need what? Evidence. They trap. Everybody going down is trapped. Okay, now they're shifting the zone with what? With our evidence candle, and then 50 pips, boom, hit very quick. Okay, even though they went more, we literally don't care, because this is a trade you take with a bigger lot size. I know, of course, this candle was like it increased the risk, but this was a clear risk candle, and if you feel uncomfortable, don't take it. But I'm trying to show you the concept. Okay, I'm trying to show you the concept. Okay, so it's the very same thing. Trapped volume below the closing price of yesterday. Equity opens, they break up. They, at this moment, we don't know what they're gonna do. They're trapped. This is evidence. Now we know what they're gonna do. They are gonna move away from trap volume. This is why I say 50 pips hit very quick. Okay, you got paid, got out of the market early. Less stress. You can keep on going with your day. And believe me, this seems like it's very less profit, guys. If you take this every day, even those with small account sizes, maybe if you have a small account size, you are risking maybe $20 to make roughly $100. If you're risking $20 to make $100, okay, you know you're gonna make them easy, quick. 50 pips, that's $100. Okay, that's 1:5. That's 1:5 risk reward ratio. You take these things consistently, you're gonna grow your account very quick. Okay, so this is a very clean strategy, but don't like be greedy. Okay, because you're never sure if they're gonna come back for you, so never be greedy. Okay, another one Here you see they're taking people up, they give a head and shoulder, okay, and then they break down. You don't want to be risking here because this candle is too big. This is evidence now. This is evidence. Why? Because this is a trapping pattern. The head and shoulder is a trapping pattern. Triple top, double top, those are trapping patterns. This is a beautiful trapping pattern. The market breaks down right after the equity has opened. That's why I said I always wait for the equity. It makes things easy. It breaks down. This market has broken down, but at this moment it still means nothing. What do they do? They come down. Okay, you can draw your line here. Okay, you draw your line here. You see, they are just trapping, sending people into trap volume. You don't want to be sent into trap volume, and then they break out. You see, pin and golf, they break down. This is enough evidence for you. You take it, you put your stops above here. Here's your 50 pips. You see, you take it here. Here's your 50 pips. Very, very quick. I just didn't draw that trapping line. Okay, but this is trapping on a 1 minute time frame. You will see how they are squeezing people. You see something like a triple top, okay, and then they break down. This is a pin and golf. This shows you that they are done with the job. This is evidence. If you didn't trust this, you could have taken this and put your stops right here, and then your 50 pips again were gonna be hit. All these two candles are evidence that now they are breaking down. This is what we want to see. Okay, this is what we want to see. We trade evidence. We don't just guess direction because we don't know what's gonna happen. We want to see trap volume. We want to be patient, sit on our hands, and wait for the clean opportunity. Okay, I believe that by now you can see all these things, guys. You can see all these things. They send people up, then they break down. At this time, what are we doing? Nothing. Okay, they give that trapping triangle. You know the trapping triangle. You know the patterns. This is a trapping triangle. What are we doing? Nothing. Okay, and then they give this beautiful engulf, pin engulf, that goes out of the trapping triangle. What does this tell you? It tells you that they are done with the job. You see, send people down. They keep sending people down. I told you about this slope. This slope is very important, okay? Because everybody going down is trap, and they don't release them. Then they give this last push down, okay? They go up, they give a pin, followed by this one, and then this is this is actually the evidence we need. You take it, you put your stops here. This is it's gonna explode. Boom, your 50 pips got hit very, very quick. This is trap volume. They use the triangle. They trap below the high of the day of yesterday. This is where they trap volume, and they are continuing up. Okay, we wait for evidence. At this point, we don't know what they're gonna do. Okay, we don't know what they're gonna do. We are sitting on our hands. The importance of sitting on your hands. The importance of understanding the significance of patience. Okay, patience, time. We're waiting for the right time, waiting for trap. This is trap. This is a trapping triangle. Waiting for trap volume. We are waiting for evidence. That beautiful engulf that shift the zone. It's not just any engulf. It's the engulf that shift the zone from trapped volume. That's when we get in. Boom, 50 pips hit. You are done for the day. And remember, on this video, I'm only focusing on part one. On part one, which is only Nasdaq. Okay, S&P has its own setup. Okay, S&P 500 has its own setup. US30 has its own setup. That's something you must understand. Okay, I will keep producing these services. Okay, so now this is the third strategy. I told you on this channel we focus on two strategies. Day 3, which is mostly going to be reversals. We focus on day 2 continuation. This is the third strategy we are focusing on. Here we don't use day count. We actually use the evidence they are giving on the day. Okay, evidence they are giving on the day. Oh wow, this is so beautiful, guys. I'm getting tired, but you can see everybody below. You see, everybody below is trapped before the equity time. Now what do? They keep going out. We are not chasing this because they haven't given us that evidence candle. Okay, we are not chasing this. Okay, this is trapping. This is the beautiful slope. They explode. Yes, this is the kind of trade whereby this is the evidence we are looking for. And as I said, nobody's immune to losses. You see, you take this trade, it explodes, but they come and close you. If your stops are right below here, nobody is immune to what? To losses. But look at what they do afterwards. they send people up with a beautiful slope whereby they are just sending people up. Now the market breaks down, they give another slope. Now this is an explosive slope, okay? But we know who is trapped. They have trapped volume below the closing price and below the low of the previous day, so chances are then they might not take these guys out. I've been explaining this, okay? And now the prices break up. Yes, of course, we took our first loss here because we waited for this evidence. You see, this is just trapping and then they go up. This is evidence, okay? This is evidence, okay? So yes, we took this evidence. This, say maybe it's our first loss, but you see what they do? They give that slope again, prices break down, you see, they break down and they give us that beautiful engulf, which is evidence that now they are going down. But again, we know who is trapped. They've trapped below these levels. They might not take them out, okay? Because they might be preparing for the next day, okay? And what do? 50 pips hit very quick. You see, evidence. Even here, like they didn't really show that trapping. As you can see, they just pulled back and continued. So they didn't really give that trapping or that beautiful consolidation. You see, this candle just went up and they pull back and then boom. So here there was not that trapping. But again, I know if you are trading evidence, this was a good evidence. But again, this is just one move that is going up, okay? And this is just a pullback. There is no trap volume here, but here they trap, sending people up, okay? Don't chase moves. They send people up. If you are sitting on your hands, they break down, boom, engulf. That's the beautiful entry, okay? And this was the most cleanest one. Guys, let's end it here, okay? Let's end it here because I believe it's now getting way too long, and I really thank you for staying this long, okay? Even though I still have other examples, okay, where they trapped above. This is a normal trend. We did explain about the different kind of trends. Normal trends, beautiful slope in line with the trend. The slope is in line with the trend. They explode down and the equity opens. You see, they consolidate, and then they break down. Okay, fine. We don't chase moves. And then what do? They consolidate. But with experience, you could have taken this, but we want to see trap volume on the strategy. Remember, I'm trying to make it very easy, and I've been trading this for quite some time, and I'm not gonna assume that we understand these things the same. So I'm gonna say stick to the easiest one. What do? They trap, sending people up. Boom. Here's the engulf. This is evidence. Boom. 50 pips hit in just few minutes. 5, 10, 15, 20 minutes. Boom, 50 pips, you are out. You can use any lot size on this trade provided you follow proper risk management. Your stop is tight. I told you this is a low risk kind of trade. Boom, your stop is hit, your take profit is hit very quickly. Okay, don't be greedy. This is a normal trade, okay, whereby they trade down, they pull back, they trend, okay, and then they trap. I told you they are gonna trap every time, okay? We want to see the trap because we must understand that if we are in a trade, chances are they are not gonna release these guys. And this slope is an explosive slope. Now we wait. Just sit on your hands until they give the easiest trade. Don't chase things. Sit on your hands, okay? Sit on your hands. Then they trap, boom, down, okay? I know for those who chase this candle, again, it makes sense, but you see, boom. If you chase this candle, obviously you're gonna keep your stops above it. They trap, didn't take you out. But again, that's not what I am focusing on. I'm focusing on trap, understanding where there's trap volume. I told you, if you can't identify trap volume, don't trade, okay? There's trap before the session and there is trapping during the session. They trap, evidence. You're not gonna trade this, okay? We don't care about the pin or whatsoever, or the hammer. We care about the engulf. Why? Because the engulf has a strong psychology behind it. They shift the zone immediately, and those who actually were going up are at big losses immediately. They're only praying to God to help them, maybe pull back prices, and then God is not gonna pull back prices, and then boom, they punish. So this is something you must understand. Trapping, they are squeezing traders, trapping. On a 1 minute time frame, you will see this clearly. On a bigger time frame, unfortunately, if you go to 1 hour time frame, this will be roughly one candle, so you won't really see what was happening. Okay, that's why I prefer smaller time frames, because they will show you what prices are doing, and the thesis is this kind of trade is gonna explode. Okay, again, you see, they trap. The equity opens, boom, they go down. Going down where? Into trap volume. You don't want to be chasing these moves. They are going down into trap volume, and then they pull. You see, they go up, give you a pin and golf. We are not chasing this. Okay, we are not chasing this. Okay, and then they pull back. Okay, and they give that evidence candle. This is big, but this is evidence now, because obviously it is inside the EMA, but I told you I don't need the EMA. Okay, so even for somebody who maybe took it here, but again here, it means you must put your stops at a good place. So if you took it here and they closed you, fine, you can re-enter when they give you the evidence again. I told you I do re-enter. So here the question, where are trap traders? What time is it? Okay, engulf that, shift the zone. So always focus on this. Okay, always focus on this, and this will actually help you sit on your hands. Sit on your hands. Okay, so we are not looking at day count, because I know it's some people find day count confusing. Okay, some people find it confusing. This is the easiest strategy, where you use trapped volume and evidence. Trap volume, we understand that once they've trapped, they're gonna trade away from trap volume. Okay, so that's why we actually relying on trap volume then evidence. You see, if you took this one, they closed you, fine, you can re-enter when they go down again. But as I said, I want to see them breaking into the direction, pulling back, and then giving that beautiful engulfing candle, which is evidence. Okay, I said that in my previous video. Okay, but today we are focusing on trap volume. Break into the direction, pull back, boom. This is your beautiful trade. 50 pips hit. I told you, don't be greedy. Why? Because they might come back for you. Okay, 50 pips is gonna be hit most of the time. I told you, I've experienced this. I told you I've done this for the longest time, and I know what caused me the most of pain. And when I'm sharing with you something I did. Okay, so I'm sharing with you my evidence. Okay, this is why I don't take it lightly when somebody like comes here and say this doesn't work. Guys, it's my time. Okay, this is free content, and believe me, somebody will be charging you a lot for this kind of content. Okay, this is the easiest trading strategy, for indices. Low risk. Don't be greedy. Remember, don't be greedy. I focus on 50 pips because that's what I found to work. Go and backtest this. The dates are here, and you will actually see that it's not every day. This is the trend. It's not every day when you trade these things. Okay, it's not every day. You'll see the difference in dates, because sometimes the opportunity is not there. And if you're gonna backtest, look at these dates up here, and also go to the charts and look at the dates that were skipped and see what happened, why I'm saying the opportunity wasn't there. Okay, yeah, it doesn't mean prices didn't move during those days. No, they did move, but the opportunity wasn't there, and we need the cleanest opportunity and the most simplest one. Okay, they are sending you into trap volume. We understand that. Okay, they are trapping. This is the first pinning off. Oh, this is beautiful. Break into the direction. Usually they're gonna pull back and give an engulf, which is why here, let me show you something, which is why I showed you a trade somewhere here. Okay, let me quickly go into to find that trade. There's a trade I showed you that just broke down without even giving me that pin engulf. Okay, oh, where is it, guys? Sorry. And I told you that this is not what I trade. No, is it this one? No, this one did pull back and give this. Okay, so even on a 1 minute time frame, it did pull back and give an opportunity. There's a trade I showed you that just went down without actually, you see this trade here, I told you I don't take this. Why? Because I want to see them actually pulling back. I want them to break into that direction, then pull back, and then give that beautiful engulf. Okay, because I don't want to enter here. I don't know if the high is locked, if it's not locked or whatsoever. Okay, so this is a triple top, very beautiful, but again, I want to see them doing that. Okay, which is very significant for me, which is why I'm telling you that here here, if you see, if it breaks down immediately, if it breaks up immediately, sometimes I'm not gonna enter it because I want to see this. And most of the time you're gonna see this in all the trades. Okay, you're gonna see them where they actually broke into the direction, they tried to pull back and give that evidence. Okay, so here they were just trapping, but it's the same concept again. Okay, it's the same concept every day. Just wait for the engulf. You see, they break down, they break down to the direction, they give that last pump, they give the engulf. So you'll see this everywhere. Okay, you'll see this everywhere. Okay, this is just a different one, but again they broke up and then they pulled down, and then that's where they gave an engulf. But this is a trapping triangle. Okay, this is a trapping direct triangle. You see, the move broke up, the move broke down, and then they pull back, and that's where they gave the engulf. I just don't want to confuse you, but it's the same psychology. Okay, it's the same psychology, understanding trapped volume. Okay, so guys, I really appreciate you, and if you're part of this family, guys, you can comment, tell me, go and back test it, then come and tell me if it's working for you. Back test it, put it into practice, tell me if you are benefiting from this. On this strategy, we don't use the day count. Okay, and the reason now I'm sharing this one is because now I know that people know the day 3 and know the day 2 continuation, and this is the third strategy. I told you it takes me a long time to actually introduce another strategy into my trading, because I want to first master the ones I know. Okay, so I will be taking this one, and for the longest time I'll be focusing on these 3. Okay, maybe it will take me another year to introduce another one. So I always introduce things that I understand, things that I've actually back tested, and things that I've actually tested the results. Okay, and once I see consistency, I compare my results from different from all the strategies I use, and then I only take or introduce something that has given me like the best results. Okay, so this one is the cleanest every day, no day counting, you just rely on trapped volume and evidence. Okay, so this one is the most cleanest for indices. You don't be greedy, you take 50 pips out of the market, that's enough for the day. Okay, and sometimes, yes, of course, you'll take the evidence, they'll close you just by pinning, and then they will just give you evidence again that they are going to that direction. Don't be scared, you can take it again. Okay, and roughly this for me is a 1:5 risk reward ratio, and use your proper risk management, because as I've showed you, sometimes you're gonna lose, sometimes they're not gonna go to your take profit. And guys, don't be greedy, because mostly they're gonna come for you. That I can assure you, most of the time they're gonna come for you before hitting 100 pips, before hitting those 200 pips, and they're gonna close you. But they will go and hit your 50 pips with no problem in no time. These are explosive kind of trades. So guys, I just wish you all the best, and please, before somebody comes with mean comments and everything, this doesn't work, if it doesn't work for you, just skip it. Okay, you don't want to be blocking the way by saying this doesn't work. Guys, this is working for me, and I only share with you what works for me. You know how selective I am to strategies. You know how selective I am. I don't use different strategies or setup unless I've seen results from them. So this one is amazing. Okay, I've tracked this and it works like charm. It's amazing. It's so easy, repeatable each and every day, rinse and repeat. And I'm gonna be sharing this kind of strategy with all of you. I'm gonna keep on making more and more content on this one, so that everybody understands. But please don't just watch and end there. Okay, go and back test it, go and put in the work. This strategy works. Okay, and as I said again, this is my equity opening time, and I've actually change this I session into 4 hours after the equity opening time. I've eliminated all the first hours and all the other sessions of the day. Why? Because I only trade this one, and this works very well. Okay, when it's like this, When you master this, you won't even need the 20 EMA, because what you need is evidence. Okay, what you need is evidence. Maybe the EMA can aid you, but honestly, you don't really need it. The only indicator that is important when using the strategy is the I session, the high and the low, and the closing price. This will help you understand where they've trapped traders. But here we mostly focus on trap volume. Okay, market is broken down. We want to see trap volume before the session, because we know they might not go back to them, or if we're going to be taking a trade back into trap volume, we understand that they might not take them out, hence why we are not greedy. But with 50 pips, I know it works very well. Okay, so guys, I want to say too much. This video is way too long, and guys, I will keep on posting about the strategy, because if you look at my go and look at my community, you will see the kind of trades I've taken on the strategy. 50 pips, clean. Usually I use a 1 minute, but I've used a 5 minute here for everybody to understand and to make things easy for everybody. This is simply amazing. Once you start understanding this, you're gonna fall in love with indices. Indices present a very good opportunity, because sometimes for currencies it might take you a little longer to hit 50 pips, and during that time maybe you are not comfortable, you are stressed and all worked out and stuff, but indices will give you opportunities where you are in and out. So even if you are trading indices alone, you will be like in a good state. You can go out, have some fun, come during the US session, trade the US session, and then lock your profit. Then you are done with the day. Freedom. You are done with the day. Now you can go out, have some fun with people, rather than staying glued to your screen. Okay, this is a strategy that will keep you away from being glued to your screen. Okay, and I love it. I use it for Nasdaq, I use it for S&P 500, I use it for US 30, and okay, I'm gonna try it for other indices as well. But for me, it's enough, honestly, with these three indices. In and out quick. And for the couple of weeks, I've been focusing more on this setup. Okay, because I don't need the day count, I don't need this to set up. And whilst currencies are setting up, I'm able to select maybe 2 currencies that I've set up well for the day, and then observe them. If they give a clean trade, I take them, but I have no pressure at all, because this strategy is actually gonna deliver most of the days, not every day. But remember, we have different kind of indices, and scanning through them is gonna be it's actually easy. And one of the 3 indices will give you an opportunity. Sometimes all 3 indices will give you the same opportunity, which means you can choose, or you can just spread your risk, put your eggs in different baskets, or choose the one that is actually following. Because when they are trading in the same way, remember, correlations change. They might be correlated for the 3 days, and for the next 3 days they will be trading completely opposite to each other. So that's something you must understand as well. But this, wow, this is pure gold. Okay, and I love this strategy, guys, hence I'm sharing it with you. Okay, so guys, I really appreciate you. I want to see consistency. I really want to see you becoming consistent. Okay, and I will actually share this in my Monday meetings. Okay guys, I'll see you. Thank you.